Yo, what's up, everybody? All right, I'm just gonna give it like a minute, get some people on, and then we're gonna talk about a lot of things. But I'm gonna show you guys my trade for now. Over here, I'm a little bit down on my position. I'm trading very, very small though. I'm only trading like only $44,000. I'll show you guys it. I'm leveraging times 5 right now because I had to buy a lot of crypto, but I keep like well over 100K. But I'm just in the process right now of moving crypto to my ledger, and then I have to move USDT from my ledger back to my Binance. So it's like a weird process and phase right now. So I'm in a long for Sol. I'll start off with my position, and I'll get into why as well. So I like to use the chandelier exit indicator combined with moving averages. And I see that on the daily, there's a resistance of $28 that could still be hit. But the criteria for that to be hit is if Bitcoin smashes through this resistance. So we've been holding here for a few good days now, and there's still a chance that we can smash through it. Because the way Bitcoin's, that's the whole point of this video. I'll just talk about my position quickly while waiting for more people to get on. So if you see here, there's no doubt that this is an ascending triangle once I clean this up and it's more visible, right? 100%. It's getting higher lows except for this exception here. But when you just account for the wicks, yeah, it's getting higher lows. And there's a possible $28 target. So I like this setup just the way it is. And then I also see on the chandelier exit is trending above the 1 hour. Okay, and not only that, the 20 EMA is also trending above the 3 hour. So it's bounced above the 3 hour pretty much every single time. So with these confluent reasons that may act as a temporary support, it might just bounce. I'm not risking much. I'm only risking about 2.5%. So I could take a loss of like, actually, what's my loss possibility here? My loss could be about 4%, which is not bad, which is slightly below the chandelier exit indicator. So it's slightly below it. So I'd be taking a 4% loss roughly for a possible target of 27.5. So my R is about 3.73. So I'm like, okay, I'll take it. I'll risk like, about $1,600 to make $7,000. It looks pretty reasonable to me. I don't know if it's going to win though. Like, it's one of the trades where I'm more so on the fence about. I'm not that confident about. Because if you look at my win streak right now, this is my win streak. I'm on a $23,000 win streak over 7 days right now. So that's pretty big. Haven't lost a day yet except for this day. But yesterday didn't really count because some days you could have a down day without even trading on Binance, just depending on what you're holding. So I'm kind of itching. I'm all right to take a little bit of risk because this is a huge RR with a huge gain. So I figured that this is not the normal type of trades I would take, but because I'm up $23,000, it makes sense for me to enter a long position like this one, right? Okay, so let's get into the technical analysis today. So Bitcoin, guys, but before we start, if you guys want to get on the wait list, get on it. This is the ultimate bull market strategy guide that I've been working on for 160 hours now, and it's going to take about 300 hours total to complete. It's a really good course. It deals with all of the phases of the trading guide. Like every single phase, from how to scan the coin, first of all, step by step, how to talk about the indicators on a masterclass level, how to enter each trade as well, how to manage the trade, and how to exit the trade. And I'm working on this chapter right now, and I realize it's really detailed. It's so well written up. I probably wrote about 20 hours of write-up just so you can have a good description to accompany it. And it's unlike any other course that I've released before because this one has, first of all, 2 bull market experiences and 2 bear market experiences. And I've had a lot more time to write it and a lot more time to digest it. And it's also specifically focused on just the bull market. And I think that anybody that picks up the course, it's fairly well priced in my opinion. It's going to go for $550 for the first 100 members, and that's already 40% off. If you're a lifetime member, it's going to be $399 for all current lifetime members. And then after that, it goes up. And I know that it's going to go up a lot in price because let's be real, during the bull market, I could charge more. When people start to flock in, I can charge way more. It's just business, and I know you guys understand that. So you may as well pick it up while it's 40% off right now and DM me to get on the wait list. So let's get on with this. No more shilling. Let's get professional. So Bitcoin found a major resistance, okay? Did you guys know that $750 million of Bitcoin of crypto got liquidated? And the majority of it was actually in Ethereum. And a lot of these coins, when they liquidate, this is what happens. It's a short squeeze. So let me explain to you guys the quick mechanics of how a short squeeze works. So there's a long versus a short table. That's by Bitfinex. That gives you a general gauge. Okay, Bitcoin long versus short. Where's this? Where is this? Oh, well, long. Okay, so there's one right here. So Bitcoin longs gives you kind of a general idea. Okay, and if you take a look, let's get back here. So the Bitcoin longs. So right here. So did you notice? Oh, I don't know where it is. Hold on. Should have planned a little bit better. So right here, did you guys see these shorts right here? This is just a representation on just Bitfinex alone, but of course there's other tables as well. So if you take a look here, since pretty much January, where the rally began, that's how many shorts have been liquidated. So whenever a short gets liquidated, this is how it works. People get liquidated because they're leveraged. Okay, they're leveraged times 2 or times 3. If you're leveraged, for example, times 10, if Bitcoin moves 10%, you are now liquidated. So if you're in a short position and Bitcoin even moves up 10% and you're leveraged times 10, you get liquidated. And there's a lot of people that are leveraged. There's tons. There's retail traders, institutions that are leveraged, people like Michael Saylor, people like myself. We're all leveraged to an extent because we want to use more money to make more money. That's just how the market works, okay? So when people are leveraged, say 10x, Bitcoin spikes up 10%, it starts to create a cascading waterfall upwards. So when there's a short squeeze and you get liquidated, people have to buy. So what they're doing when they buy is they add fuel to the fire. So as the price is going upwards already from people perhaps manipulating the price, or they believe the bull market's beginning and they're buying, either way, people are buying. But it's the people that have been liquidated that are forced to buy that add even more fuel to the fire. So as the price keeps going up, more and more people keep getting liquidated, which adds into a massive rally, just like what we've seen so far. But right now, it was by far the most parabolic rally that we have ever seen ever since the beginning of the last bull market, or ever since the last bull market. So this is a linear move. For example, if you see here, this is a linear move. Okay, those are nothing. This here, sure, but it was short-lived, but it was straight up and not parabolic. A parabolic rally is defined by a curvature that changes. For example, in a circle, okay? So the curvature starts to change and it gets more steep and steep and steep and steep and steep. That's a parabola, if you guys remember from math. So here we start to see this parabola going to the upside. On the 3-day, it was the most prominent because what we observed was this combination that's extremely powerful. It's called the 3 white soldiers, where you're seeing 3 candles, 1, 2, 3 that are green, and then following that, this is what we saw after. So the question is, are we going to smash through this resistance right now? Okay, if we smash through it, there's no doubt in my mind we're going to go to around this range of 22,400. So what were some of the reasons why we got bullish on a technical level? So let's look at it technically first, and then I'll show you guys some of the fundamental stuff on charts as well. So first of all, on the weekly chart, this is one of my favorites to look at. If you guys ever need to look at a long time standing table of Bitcoin, type in BTC to USD, then go to Bitcoin all-time history index. This is from all time, okay? So go to there and let's look on the 2-week. Let's identify when the MACD was below the negative. Do you see this white line that I drew left to right? This is the negative and above it is the positive. So this is one time right now where we're in the negative. Any other times? Let's keep going and take a look. Right here is when we were in the negative. Actually, I'll use a vertical line. So right there is when we were in the negative and about to cross over. And another time was back in 2015, right here in the negative. So if you've noticed, 2015, this actually was the year leading up into the bull market. That's exactly where we are now in equivalent year. So 2013 was the bear. 2013 was the bull market. 2014 was the bear market. 2017 was the bull market. 2018 was the bear market. 2021 was the bull market. 2022 was the bear market. Notice that they go in every 4 years, a cycle. So the year after the bull market the year after the bear market is 2025. The year after the bear market is 2021. The year after the bear market is the same year that we're in right now, 2023. Is it coincidence that literally for the past 8 years that it's cycling every 4 years? Is it coincidence? And that there's a MACD crossover here, and then there's a MACD crossover here, and there's a MACD crossover here? I don't know. Maybe it is. But what happened after we saw those MACD crossovers? Let's take a look. After we saw the MACD crossover, it's screwed us over here. It ended up falling down another 45%. So that's not the best case example, is it? But if you were still in the position you were holding, what would have happened was this. You would have made yourself a gigantic amount of money. Like right now, I bought it because I'm really long on Bitcoin and in a lot right now because the MACD crossed over and there's a lot of other factors as well. And even if it drops 40%, I don't care because I know that based off of history, it's going to do something crazy. So based off of history, after that drop, Bitcoin in 3 years did 11,800%. Look, after that MACD crossover, okay, in the same year, it fell down more in August, but it still did 11,800%. That's freaking crazy. So if you've noticed one thing is that whenever the weekly MACD crosses over, it came down here, right? It dropped to a lower low or it made some significant drop. So the second one was right here where it dropped. So what this did was a massive 340% rally, but it dropped about 70%. So the commonality between the last crossover and this one is that they rallied and then they made some major drop. So what I'm getting to is don't be scared if there's another major drop coming. It could still happen, but it's not guaranteed. But from what we've seen in the past before, after the major drops, they tend to do some stupid numbers. So after it rallied, the MACD crossed over, Bitcoin did 1,700% after. So do I care that it's going to drop a little bit more? Not really. I don't care if it drops 30%. In fact, I would be excited because I would be buying so much more crypto. I'd be adding stacks like Algo and Sol and Ethereum and Cardano and ADA and probably HBAR and DOT as well. So I got a lot of coins in my portfolio right now. And some of my favorites are these guys right here that I'm holding the majority of them of. AVE is one of my favorites as well. AVAX. Those guys are such hot coins to me. I think one of the hottest ones this year will probably be Algo, honestly. Like, I'm not giving you financial advice, but I'm just saying that I hold like almost 6 figures of Algo now. Like, not in coins, but like in dollars. So that's a gigantic amount. So why did I buy here? Because of the same reasons of that MACD. It's freaking crossing over, man. And even if we get one more capitulation, no problem. I'm okay with that and I'm ready to buy more. So another reason why I bought is because Bitcoin daily RSI has now officially reached the highest that we've ever reached ever since the previous bull market. So in the previous bull market, in November's high was only there. Guess what? We're actually higher than it right now. And then if you take a look at April, it kept getting a series of lower highs, lower highs, lower highs. This right here, believe it or not, this RSI, this was the all-time high back in November. Take a look right there. See? Notice how we're getting a series of lower highs, lower highs. So you can't always gauge in a bull market the RSI. Remember this really firmly, what I'm about to say about RSI. It is freaking useless except for in 2 situations. It's useful for identifying overbought and oversold regions. That's one case. And the second case that it's useful is identifying bullishly or bearishly diverging RSI. But you can't count on it. And if it's one thing that's proven is that you might have seen bearishly diverging RSI, and here as well. It doesn't mean it's going to drop. Okay, you might get 4 bearishly diverging RSIs until it drops. So this is why in my bull market, the ultimate bull market strategy guide of mine, I'm only talking about RSI a little bit. It's not really important to me as much anymore, and I've learned how to prioritize many things. If you take a look at the, excuse me, RSI in a weekly, fuck, it's gonna indicate, excuse me for swearing, it's gonna indicate nothing. Look at this, it's sitting at 95 RSI in a weekly. Like, come on. You know what I mean? And then it bearishly diverges, but the price is still going up and steady. So RSI, okay, it's at 80, it's at 90, we get it. It's at 91, 92, 95. Still not going to go down probably. Like, you got to use different methods, right? So I love Bitcoin right now because the daily RSI is so high. The 2 weekly has crossed over. But let me show you one other thing as well, okay? Bitcoin needs to break these key resistances for us to be bullish. If you take a look at, I gotta go back to the other table here. Okay, these are key levels between $23,500 and $25,000. Okay. Hey Ash K, my Discord group, it's not a signals group. You can take a look in the description below. It's more focused on education. If you're looking for signals, you are absolutely in the wrong place. And I'm sorry to say, but if you are the kind of person that's looking for signals, generally, you're probably not going to do well as a trader, and you're probably just going to give all your money to the market. Because the only people that do really well in trading are the people that are self-sufficient traders, the ones that actually learn, the ones that put in the work, the ones that develop a long-term lasting skill so they can bring it anywhere with them in the world, trade any market in the world and profit. But if you're here looking for signals, hey man, join my Discord group. I'll give you all the signals you want. Thanks for your $50 a month, you know? But the people that are actually there and they learn and they're putting in the work, like I have for years, like my friends that are very successful traders as well, those guys are the ones that thrive, you know? Signal groups, the only people that make really good money are mostly the people that are selling the signals. They're using your subscription to pretty much just give you that false illusion that, hey, come, I can help you make money if you follow my trades, right? That's bullshit. Like, the guys don't even trade themselves or probably show their profits. In my group, I show my profits, I show my losses. This is the position that I'm in right now. I'm down $600. I'm a professional trader and I'm transparent. Don't follow guys who give signals, man. You're just going to get burned down the road. Only follow people that can actually provide value and insight to your future potential. Okay? That's my opinion. Our side don't mean too much because all the moon boys are buying without looking at the chart. I don't know why that was hidden. That was really odd. Okay, I'll answer your guys' questions at the end, but just keep them coming. I don't mind seeing them at all. Okay, I'm going to show you guys the EMAs now. Okay, for example, on the... Okay, I'm going to go back to... Okay, this is a good chart right here. Let's look for a chart that has traditionally held for a pretty long time on the EMA. Okay, actually, let's go to the 55. So let's look for an EMA that has held for a long time on the 55, and it's never really broken below it one time. And it would be the 55 EMA on a monthly. So if you kind of extrapolate that, this would probably go down to over here. This traditionally held right there. I would say it just held by barely. It held here as well. So lately, it's been really strong as a support. But if you've noticed that since June, we fell below it, not only did we fall below it, but we tried to get back in there for 2 whole months. And it got rejected. So because of these two facts, that it has held traditionally for so long, and because it fell back down and tried to get above it, it's now considered a really strong resistance. So $23,500 is a major resistance. Okay, that's one resistance. Now the higher end resistance would be on the 200 moving average right here. Let me show you it. So the 200 moving average is right here. So if you look on the weekly, actually this broke above it. That's awesome. I didn't even realize that. So the 200 moving average on the 2 week, look, it held, bounced there, fell below, got back up. That is freaking awesome, and I never even noticed that. Let's see if we can notice any other averages, such as a 20 moving average on a shorter term. So we see that on the shorter term, the 20 moving, not really. The 20 moving average broke above here one time, rejected around there, and now we broke above it. So 20 moving average is actually bullish on the weekly. Okay, and the monthly 200 moving average is also bullish. So we're seeing a lot of bullish signs right now. Okay, let's move on to the total market cap. Okay, the crypto market cap right now literally went up about 30% in a few days. 28% it went up in like 1 week roughly, when we went from 16,000 to what we're at now. So crypto market cap, if you take a look here, check out December 17 of 2017, the bull market in 2017. That's the market cap that it reached. Is it coincidence that we literally got to it how many times now? Right there. And the whole period between like October to December, that we just didn't want to drop below 750 billion. And we actually peaked almost at 1 trillion. So just think about that. We went from 750 billion to 970 billion in like days. So it obviously is a very strong support level. Okay, so the next one we'll take a look at BTC dominance. So BTC dominance didn't want to get below this range. Okay, so we got two lower ranges. We got one here at around 39.67%. That's one for sure. And the other one was in near the all-time high when Bitcoin was reaching in 2017, early 2018. So here, Bitcoin dominance dropped to like 35%. Okay, that was during the major sell-offs. And then we were hovering around the Bitcoin dominance here for about 2 years. What? Is that right? Hold on. Am I looking at this right? Bitcoin dominance has been here around 40% for 620 days. Holy crap, I didn't even put that into perspective. So that's been a really long time. Bitcoin needs to pick itself up soon. Hopefully there's a surge in Bitcoin dominance. If we do see it, we're probably going to see a sell-off in the alts, and more realistically, a large rally due to sell-offs in the alts. So let's take a look at another chart here. This one here is the Bitcoin year-to-date returns table, where it's showing you the returns for each year. I'm just going to briefly go over this one. So these are the three bull markets, 2013, 2017, 2021. This is from a subscription that I pay at Into the Cryptoverse for, I think I'm paying $150 a month. I don't remember. But I just like there are charts like this, but you don't need it. The only reason it's important is to share with other people if you're kind of doing what I do with YouTube, right? So here, oh yeah, you're right, Ash K. Oh gosh, why do I let people in this group? What, I forgot. I honestly didn't mean to make it public, but it was just too late, and I put it on Twitter. So I'm like, fuck it. I'm just gonna let it be public here from now on. Anyways, so if you look at the returns table, it's basically showing you how every year there are diminishing returns. So take a look. Diminishing returns. The ROI, it significantly gets lower and lower as the years go by. So in 2013, we had some major ROIs at around, if you put in $1, you would have got back $82. That's what it's saying. So that's a pretty significant amount. If you put in $1 here for 2017, you would have got back $20. But in 2021, the peak was only about 2.1, which is really not that much. So it might be your very last chance to get into a major bull market, and it's really important to study. Like, I'm telling you guys how important it is to be putting in the work now, to be really diligent, to be backtesting, to be preparing and planning your strategies, because it might very well be the very last bull market that you're ever going to get a chance to see some major returns before regulation comes into play. So I would definitely recommend getting on it. Some people have been like, oh, I'm really lazy, haven't done anything for 4 months, the market's been too slow. It's like, yeah, we get it. The market's been really slow. But that doesn't mean it should be an excuse to slack off and not study and just sit there like scratching your ass and balls and doing nothing. You should be backtesting. You should be studying. You should be writing out your strategies to prepare for the next bull market to come. The more that you prepare for the next bull market, the better you're going to be. And if you just decide to start studying during the bull market, well, it's already too late. You're going to be so busy during the bull market that there's no time to study. It's basically the final exam. You're going to have so many tests, small tests and assignments and homework leading up to it. And the better you do, the better you're going to do in this final exam. So I highly urge you guys to not slack off, because this table shows very clearly that the next bull market, it's going to be a lot less returns, but it might be one of the last ones. So if we take a look at the monthly returns table, we see that right here, January is actually really bullish so far. Every year after the bear market, so that would be the years 2015 and 2019, we have ended up being very bearish, both red, 2015, 2019. And here we're actually in the first green month. Now, I don't know if this year is going to be like a gigantic bull market, but what we've seen is the years after the bull market and the bear market, especially, we see that 2015 was a mixture of 1, 2, 3, 4, 5 red months, 7 green months, and then 2019 was a mixture of half and half. So you can kind of see how the equivalent years could play out. You can see that 2023 is going to be like a consolidation year as well. So I don't see it breaking to the upside and doing some monster numbers. I see it as a year of accumulation, regulation coming into play, waiting for this recession to play out, the economy recovering, and people just slowly building more awareness with crypto. And hopefully this inflation will get curbed soon. So it's not possible to have a major bull market year, in my opinion. We're just going to have to wait and see how this ends up playing out. So my thoughts right now is that Bitcoin is most likely going to smash through this 21,500 resistance. And then after that, we're probably going to end up hitting something higher, like the $22,000 to $23,000 regions. If we take a look at the supports, we see that around above 22,000 is kind of a bull trap region, but it might even get up there, right? It's possible. So you take a look at 24,000 right here, right? So this is the next possible resistance right there, 24,600, if we end up breaking above these ranges. So right now, it's just a slow period of consolidation. If you take a look at Bitcoin, we're still trending nicely above. Actually, I'm going to go to my chart now. Okay. If you take a look, we're still trending above the 4-hour. We're not really going below it. Actually above the 3-hour. So we're still finding steady support right here for now. I mean, if we break below it, that would be kind of devastating. Based off of chandelier exit indicator on the 3-hour and the 2-hour. The 2-hour is still holding strong. The 1-hour actually was the one that's still holding as well. So Bitcoin on the chandelier exit indicator, the volatility is still indicating that it's possible to go to the upside. So yeah. So I'm just going to take a look at some of the questions. What is this? So I'm just going to answer some questions that people might have. How would you prepare? Would you start to short? Oh man, I would not short this market at all. I mean, what's there to there's no way I would. Shorting is over. Like, the shorting phase is freaking over, guys. You've had how long to short? You've had 14 months to short. The shorting phase is over. The bull phase is starting to begin here. But because we're starting to see this bull phase, right, we don't know if it's official, and we don't know how long of a trend this is going to last for. So, but from what we see, it's so damn bullish that we have to all agree on that, because that's what we see. So shorting is the last thing that you guys should be thinking of right now on a larger time frame. So I do not recommend shorting. If you want to take a risk and short, by all means, but know that it is really freaking risky right now. I mean, if you take a look at the month, like if I take a look at the risk analysis chart, historical risk levels, okay, this is like a formula that this genius invented. I don't know what it is, but if you take a look at the historical risk versus the BTC price, we're at a really, really low risk level for longs. So the best times to enter short is when the risk is really high relative to the price and most likely above it. So right now the risk is really low because we've reached some major rallies. So I don't think it's a really good time to be shorting it right now at all. Like, at all. So yeah. How do I DCA when entering a trade? Well, I don't really dollar cost average anymore for trading. What I do, because I've eliminated that from my trading. I don't dollar cost average and keep buying as it drops. I have more precision now. So I have very, very precise ways to enter in a trade now, and that can get very complicated. So I don't use Ichimoku, I don't use Bollinger Bands or stock RSI. So Farouk, I couldn't comment on it. I only comment on what I specialize in, and I use MACD, RSI, etc. But of course, they're very popular indicators, and a lot of people use them. And you can use a combination of multiple indicators to get the most confluent reasons to make a decision. So if that's the indicator you prefer, by all means. I use RSI and MACD because those were the first things that I was introduced to. So yeah. So bearish divergence on the 1 hour. I mean, you don't really see shit. I don't know what you mean, but like by bearish divergence, FR. I mean, RSI is indicating shit when it's in neutral level. I would not use it for anything. All that we see is Bitcoin is sideways right now, and it's trending above EMAs, and it's trending above chandelier exits still. So right now, it's still holding its momentum, and it's holding its strength, and holding its trend. But of course, that can change anytime. So yeah. So anyways, I'm just going to end on log scale a trend line from ATH to the lower high and extension. I don't understand. That's too wordy for me. I'm like the kind of person where if the text is too long, I just don't read it. Because I'm not a texty person. I like to look at charts. So we're now in a full bull run? No, I don't think so. Definitely not, Jorge. Definitely not a full bull run. Like, we're in a short-term bull run, and there's no denying that. Okay, because how could we not deny that this is a short-term bull run for now? There are different degrees of bull runs, okay? There's like a short time frame, like shorter term, medium term, and a long term. For medium term, you can review the video and watch how I was talking about the EMAs. Like the EMAs need to cross certain numbers like above 23,500. So we got to start getting some golden crossovers. So we're far from considered into a gigantic bull market right now. We're more so in just like a miniature bull run that has been going on for a few days. So we have to wait to see how it's going to play outwards. Got to give it some time. It's very correlated. It's like 80% correlated to the S&P 500. So yeah. So I think I'm gonna just end the video here. It's been a little bit long already at 33 minutes. So thank you very much for joining me, guys. I'm sorry for Vishk. There's always one, guy, or Ash K. There's always one guy in the group that's like an idiot. Sorry to say, but he's, there's always that negative guy in the group. So I do apologize for that. Anyways, have a great day, guys. Take care, and thank you for joining me. Stay safe. Watch out for the breakout, okay? It could